Hey guys, All in Crypto here, and welcome back, ladies and gentlemen, on the 22nd of January 2023 for another cryptocurrency market update. We get these videos out every single day where we look at not only the cryptocurrency market but the broader economic landscape to try and figure out where this market is going. And really, since the start of January, we took a non-bearish approach, and actually for the first time in nearly a year, bought crypto on the 5th of January, having been out the market and mitigated a lot of damage that came the year before it. So we've got lots to get into in this video. I'm going to be sharing a number of things with you. We're going to be looking at liquidity and global liquidity, and we're going to be looking at the Chinese 10-year bonds and how actually markets have a huge correlation with this. This is quite natural as we live in a global world, and global liquidity is really, and liquidity is, it's a key concept to understand in regards to investing, because liquidity just refers to money and, you know, the kind of free flowingness of that money. And we've stressed that actually last year was going to be rather a bad time for markets, as we were going to have a lot of that liquidity repriced and going into deliberately the debt markets to kind of fight this battle of inflation. Jerome Powell's key statement to me last year was, we are going to bring demand in line with supply. Now, I've had quite a few comments saying that some of the videos that I've made have almost been somewhat braggy. And I have to take that as a fair comment. And I'd like to give a bit of an explanation why. So I'm going to spend a little bit of time rambling. I know I ramble. Forgive me, guys. But what I'm probably going to do is put a section into the video, a timestamp, so that you guys can skip ahead if you don't want to listen to it and you're just here for the sort of economic perspective. And a little bit of Bitcoin TA. And we're also going to look at, you know, the week ahead, major financial events or economic events that are going to take place. And I think many people have forgotten that it's actually earnings month. You know, this is a big month, January, for earnings, and we will be reviewing some of what's to come. This, of course, is going to affect the traditional stock market, which is going to have an effect on the crypto market, as they're very correlated. But I really want to just get this out the way. Now, I've been rereading a book. So we're going to change the name of the channel, guys, to All in Philosophy. I've been rereading George Clayson's The Richest Man in Babylon. Now, for anybody who hasn't read this book, I would highly, highly, highly recommend it. And we've come out and we've previously stressed the fact that, you know, YouTube is not how I make my living. I am a content creator. I love to speak to you guys. You know, I'm very passionate about the blockchain space. I'm very passionate about investing and trading. You know, it's how I make my living. And I'm also very passionate about blockchain. So, you know, doing this channel, being on here, talking to you guys daily is something that I absolutely love. And we've maybe came across a little bit braggy recently. And I think that, you know, sort of reviewing this, it's a fair comment to make. And I don't mean for it to come across. I'm just telling you guys my opinion and what I've done. And I think I get very frustrated with the sort of, please, if you don't want to listen to this, guys, skip a couple of minutes ahead and we'll get into the financial side of things. But I think I get very annoyed at how the kind of YouTube, Twitter, crypto space, investing and trading space is, because it's fake as every other industry. And I think what I'm really trying to do here is prove to you guys my worth. As somebody you should listen to in regards to the blockchain space and investing in it. Because I've been here for a while, I've made a lot of mistakes, and I just want to take you and read this passage from The Richest Man in Babylon. The Richest Man in Babylon is essentially centered around Arkub, who is the richest man in Babylon. And essentially it starts off with his friends asking him, you know, we all went to school together. How is it that you've accrued all this wealth when we've all worked hard? And he basically explains that there's laws to accruing wealth, and that we should all follow them. And one of the, you know, right from the start of the book, and it goes into a lot more detail, it essentially mentions that you should pay yourself. And that sounds strange because some of us get paid a wage, some of us earn money and we get paid it. But in actual fact, if you think about what you have left at the end of the month for yourself, you know, after you've paid the grocer, after you've paid the garment maker, whatever it is, you usually aren't paying yourself. You're actually working to pay other people. And this is kind of how the financial landscape is set up. I believe that we all live in a form and it's probably more so now than it was back in the Babylonian days, of financial bondage and slavery. I think this is how the people at the top keep everybody with their heads down and not questioning things. And I'm here to question things. And I think, you know, I want to be somebody who people look at as a or go to for insight in regards to the cryptocurrency market and blockchain as a technology. You know, we do a lot of sort of fundamental technical videos on blockchain. And this really stood out to me, and I've been rereading this recently, and I want to just read this to you. So Arkad essentially goes to Algamish, who is already quite a wealthy guy, and he kind of asks him, you know, how have you made this money? Can you tell me some of your secrets? And he says, look, you've got to start paying yourself and basically save at least 1/10 of your wage that you can put away. And then he goes on to say, you actually then need to take that 1/10 at the end of the year. He comes back after a year's time and he goes, have you done what I've told you to? He says, yes, I've saved 1/10. And then he goes, you know, have you put that to work? And he goes, I have given Asmur, the brickmaker, who told me he was traveling to the far seas in Tyre, he would buy for me the rare jewels off the Phoenicians. When he returns, we shall sell these at a high price and divide the earnings. So after he had saved, like Algamish had told Arkad, to essentially save 1/10 of his earnings to start building up this pot of wealth and making his purse fatter, he then told him to put the money that he saved to work through investing it, which is what we're all trying to do here. I think that this is important because many of us here are here on the road to financial freedom. Algamish then essentially says to him, every fool must learn, he growled. But why trust the knowledge of a brickmaker about jewels? Would you go to a bread maker to inquire about the stars? No. By my tunic, you would go to the astrologer. If you had power to think, your savings are gone. Youth, you have jerked your wealth tree up by the roots, but plant another. Try again. And next time, if you would have advice about jewels, go to the jewel merchant. If you would know the truth about sheep, go to the herdsman. Advice is one thing that is given freely away, but watch that you take only what is worth having. So I think this is why I've been kind of braggy recently. I don't need to explain myself, but I feel like I want to. You know, I do care about you guys watching these channels, and ultimately these videos are here for you. It's annoying because people are going and looking for crypto and you know, investment non-official advice from content creators. These videos that I do are recorded in one take. I use a very simple software, and essentially I post it straight after. I don't do any editing or anything like that unless it's an interview that we do. And the reason being is because I'm far too busy doing what I'm telling you guys I'm doing. Whereas the majority of other individuals spend all their time on Twitter, all their time on YouTube, making content, and you're going to content creators for investment advice. Just think about that. I thought it was great. But anybody, this is not a plug. I don't have any affiliations with this, of course. Fantastic book. Well worth a read. Let's get into a little bit of Bitcoin and crypto TA. On a side note for that, this is another Ramble famous tweet. You're making a huge mistake buying crypto before March 2023. Legendary. You know, this guy's going to go down. And this isn't really a hate on Raul because I'm humble enough to understand that I'll get things wrong all the time. Or not all the time, but I'll get things wrong as well as a sort of macro speculator and crypto investor and investor generally. So I'm humble to that fact. But Raul has been historically wrong, you know, on many things, and you know, he's kind of unexcusable given that he's supposed to be this kind of big financial, you know, player. So Bitcoin, we've done a lot of work this year explaining the reasons. We even have a thread posted on our Twitter of why we think that actually this bear market could be coming to an end. Now, we're not calling a bottom to many people's distaste. People want 100% certain answers. I can't tell you that we aren't going to put in a new low. I don't know what's around the corner. It's a very sort of shaky, broad financial landscape. There's lots of sort of geopolitical risks and other kinds of risks. But what I can say is on the 5th, and we showed you the proof of this, and anybody who wants to join my Patreon, not plugging it, you're welcome to do so and actually see the receipts. We actually bought crypto for the first time. And this is the 5th here, guys. okay? And we did that based on looking at the macroeconomic landscape and coming up with a plan, okay? We've been out the market, not the earliest, but not the latest, around about 44K. I'm just saying this for anybody who isn't aware, by the way, not bragging. And we took a position back into the markets. I'm showing this to really say, look, guys, we're not just, we can back up everything that we've said. We're not just saying it and trying to make content. So in the same way that this bull market ended with this divergence showing less sort of conviction in the move and that the trend was subject to change, you've had this sign here that we've said very clearly needs to be taken seriously. We've shown you things like USDT dominance. So this is stablecoin dominance. We highlighted this. No one else was really talking about it. We've also said that we don't think rates, which is what are driving all markets, have very far to go. And we've done this by looking at the 2-year government yields. And actually now markets before, and we said this way before the CPI print came out, are now pricing in a lot less aggressive Fed and actually looking for rate cuts. Now, why is that important? Well, markets move on rate hikes. So we'll go ahead and get rid of this. And actually, you can see divergences here. You've got a lot less momentum in this move, but I don't really think divergence is a great thing to look at on the 30-day federal funds rate. It's just a side note. I'm a big fan of the RSI. I know others aren't. I know that it's sort of subject to momentum. I'm aware of that, but I think it does, looking at macro trends, not necessarily give you a buy signal, but gives you an idea of where you are and the strength behind it. So this is a 30-day Fed funds futures. We've gone over this before. Bitcoin, the stock market, and everything. Okay, not sure what's going on there. Let's get rid of this. Let's do that again. So Bitcoin and the stock market sold off in preempt of rates going up because they understand what this means for the sort of broader liquidity side of things. You know, I'm going to leave this. This is me looking at Chinese government bonds, and there is a correlation here with sort of markets because it's a big sort of liquidity provider. Now, we're at this point where actually the majority of this move has been played out. It's not to say, and we've speculated that rates are going to get to around about 4.8. This is currently pricing in 4.54. So we think maybe you're going to get something like that. Comes down to maybe here. But then you're going to get something like this. Because now markets, and we already have markets looking for things to be priced in, for rate cuts to be priced in at the end of 2023 and going into 2024. So markets will front run this and allocate being forward looking. We've spoken about another things like the yield curve, which is here. Okay, and actually that markets don't typically have this horrific crash that we are expecting until the yield curve is uninverted. And actually, historically, it's not been a bad time to actually buy up the inversion, other than this one here. So we think actually the crash is likely not going to come until the yield curve is uninverted. And maybe the stock market could do something like this, and then maybe you get this crash and some sort of a, you know, who knows? And then maybe it sets up for a broader structure moving forward. So this is scenario forecasting, but we took a stance in the markets and we've looked at everything and we said, actually, we're no longer bearish starting this year off. Yeah, it's annoying that we flipped from being so bearish last year, but I have to do that. You know, I can't just marry something and just stick with it. This is not how investing works, constantly changing. And at the end of the day, guys, the goal for me selling back in March 2022 was only to reaccumulate at a lower price, and we've done that. And why are we accumulating this? I don't think crypto's going anywhere. I don't think Bitcoin's going to win in the long run, but we're really focused on looking at altcoins that I think are going to change the world, like these smart contract layer ones or layer zeros, and actually accumulating them for the long haul. And we've actually done that recently. You know, some small, some large. But ultimately, you could potentially be looking at the bottom for the cryptocurrency market, despite everything that's going on. And you'll see all these graphs showing things are historically at a really bad point, or you know, the worst they've been since 40 years. Well, at these low points, actually, typically they're buying opportunities. On the way down to these low points, you want to sell them. But when you have a chart that's like this and it's doing something like this and it's, you know, 40 years ago it was like this, and everyone's going, oh my goodness, you know, it's at this real low point. Well, if you had bought at this real low point when people were saying the same things, you know, you're kind of, do you see what I'm trying to say here? So I think there's a lot more fear in markets than there needs to be. I think a lot of everything has been priced in. We had Jamie Dimon and Paul Krugman come out and essentially say that they were a bit too bearish. I think maybe I even fall into that category. We said it before, Jamie Dimon and Paul Krugman, by the way. So no, I'm joking. Although we did. But it is still a tricky environment and a landscape to move forwards from. So you're not totally out the woods yet. You know, we do envision, and we have compared maybe Bitcoin to this period over here, or actually this period over here, only to set up for this crash that seems very, very likely. We did a video on the debt ceiling, and everybody that's got a bearish narrative was going, oh, that's it, the US is going to default, and they were using this to propagate their own ideas. Okay. Well, in actual fact, anybody that told you that the US were going to default on their debts clearly has no idea how the debt ceiling, which is not even really a ceiling, they can up it if they want to, works, and what the repercussions of the US failing their debt would be. That is your real Armageddon situation, because everything is based on debt in this world. So if they fail on that, you're looking at a literal Armageddon. Google employees scramble. So we've had lots of layoffs. These layoffs continue. We have done an entire study on the unemployment levels and markets. Now, this kind of gave us the ick, because we thought, actually, you know, if unemployment's at a high, that's when you stop markets at a low. If unemployment's at a low, then that's when you stop markets at a high. So unemployment needs to roll over some more in order, you can see, in order for this to continue going up. That's historically true. But the thing with a lot of these historic metrics, I still think that was likely going to be the case, is when was the last time we had to deal with an economy that came out of global lockdowns? So this is your Sunday update, guys. It's going to be quite a long one. So maybe a lot of these metrics are kind of skewed and laggard. Also, looking at the week ahead, we've still got economic data that's going to drive everything. You've got the Eurozone consumer confidence. So there's nothing major here, to be honest with you. Lots of surveys. Australian CPI. So that might be interesting. Bank of Canada rate decision. You know, these guys are going a lot more timidly. And then, you know, maybe home set. There's a number of things, but it's nothing. US GDP actually is going to be an interesting one. So Thursday is probably your biggest day. And then you've also got earnings. So I've had quite a few already. Moving into this week, though, we've got a hell of a lot. Things like General Motors, Microsoft Corp, Tesla. You know, this may fuel the stock market if some of these earnings are good. Vice versa, it may. You've got to watch all these things now as a crypto investor. You can't just be idly invested in crypto. We have said, and we were right about it, that you were going to get a pullback here, because traders will always short support. Short resistance. You shouldn't short support. Although traditional technical analysis is kind of like, in many ways, I feel like it's almost the herd getting led to the slaughter, because everyone looks at it, and actually the people that often make money are the people that do the opposite of it and contradict it and look for, you know, stops getting run and then take positions in terms of day trade and stuff like that. But you've had a sell-off from it. The thing is, this is showing strength. Look at this wick. People are buying this up. Japanese candlestick analysis is important. It's not too out of the realms of the possibility that you do something like this. And this could be on the back of potentially good or better than expected earnings. But this is all stuff to watch. I'm going to be watching it and reporting it to my Patreons. But just to give you a heads up on it, it is earnings week. Expect a volatile week. Look for some of these reports. Look for the general consensus. Look for the stock market breaking this support. If you get this break of support, remember as well, guys, bullish divergence. We've highlighted all this. People will FOMO in hard when that happens. And you can see the FOMO taking place with the Bitcoin space. You know, keep an eye on Grayscale, their GBTC, on what that's doing. And I think that's really all I've got for you. We did look at this, actually. It's no surprise that crypto and the stock market, you know, look at when it rallied. This is on the Chinese bonds going up, so that means yields going down, which kind of is an indication that their economy is doing a little bit better. This is maybe a study that I do separately. For anybody that's interested, let me know in the comments. On that note, guys, it's been nearly a 20-minute video. I'm going to love and leave you. I hope you found this interesting. That the main takeaway is, if you want advice about something, go to the person who actually does that thing you want advice about. Do not give the brickmaker your money to go and buy jewels. Give them your money to go and build a house. or buy bricks. You know, don't trust me to a degree. You know, you shouldn't rely on anybody to make you money. Okay, it's not what we're doing here. We're not running a hedge fund. We're not a regulated financial advisor, so I can't do that. But I can give you my opinion and let you guys decide whether you think it's the right or wrong one, and you know, maybe use it to help you make a decision. But do not trust the brickmaker to go and get you some jewels from the Phoenicians, as Arkid did, and Algamish tore him up for it. All I've got for you in this video, guys. You enjoyed the content, like, always appreciate it, so as a comment, and I look forward to seeing you all in the next YouTube video. Have a wonderful Sunday, guys. See you in the next one.